Oh, good golly, Miss Molly. Groupon is getting hammered in after hours. Absolutely hammered, down 25 freaking percent. Son of a gun. This thing's down to nearly $2 and a quarter per share. Down 25% after hours. Holy crap. How does this happen? Well, they reported earnings, and my goodness, we're going to take a look and see what did these earnings entail that made this stock um, absolutely get devastated. Well, we'll take a look at these numbers. Why don't we? So, obviously, as I mentioned before, Groupon, this is a garbage company. I don't think there's any real denying how much of a garbage company this is. So, Groupon put up a non-GAAP EPS, missed by 8 cents, but on a GAAP EPS standpoint, 13 cents. They beat by 1 cent. Revenue of $612 million, missed by $93 million. Holy crap, down 23.5% from year over year. You see, this is a horrible trend, and it is what I mentioned before. This is a company that since 2016 has been on a very steady decline of revenue. This is a very rapid decline. Overall, it's been pretty steady, but the decline certainly is there. It's a business model that is dying. Unfortunately for Groupon, it was hot for a while, but this is a business model that is dying, unfortunately for them. So this is not a sustainable company right now. I will say, to benefit them, they did post a profit. What can I say? What can I say here? But that revenue line is horrific. Let's look at some of these specifics here. Groupon missed the low estimates of its quarter four profits and revenues. Fell well short of expectations. No doubt about that. Shares were halted for news pending, which would be this trading, obviously. Well, we'll go ahead and talk about why the shares were halted in just a little bit here. Revenues tumbled 24% from the prior year versus an expectation of $705 million, and they only hit $612 million. Whew. Company also plans to exit the goods category and focus on local experiences. A market estimates at north of $1 trillion is what they say their local experiences market is. But they got out of the goods market, which is what a lot of users really used Groupon for anyways. I mean, I get the experiences and travel. That one makes sense. People use Groupon for that still. But the goods, I feel like, was a more major part of their business. You know what I'm saying? It's whatever. It's whatever Groupon wants. Obviously, and here's CEO Rich Williams saying, "We did not deliver the financial performance we expected during the fourth quarter, and we recognize we must move swiftly to put Groupon back on the growth trajectory. Good luck with that." Operating cash flow for the full year was $71 million. Really? Really? Free cash flow that period was $4 million. What the heck? This company might as well be broke. Oh my gosh. $4 million? What is that? That's horrific. Holy cow. On top of this, guess what they announced too? Groupon has named 2 new directors and a new CFO. Interim CFO Melissa Thomas is getting the job on a permanent basis, and you can tell she's great. Honestly, though, in defense of Melissa Thomas here, I see why she's getting the job. This is a company that certainly was not pulling in any profit, but now they actually do guide to have a fully profitable year. So maybe this Melissa Thomas is good for the company. It adds Valerie Mosley and Helen Vade to the have been appointed to the board of directors, and now the board has 10 members, 9 of which are independent from the company. Yikes. Let's get into some of the specifics. All right, we obviously have to look at this. We'll talk about what in the world's going on here with a potential, issues going on that made the shares go down 25%. Obviously, it wasn't just its awful earnings. It had part to it, but let's take a look. So it announces a strategic plan to exit goods. by the end of 2020. 2020 goals include high single-digit annual billings growth rate. 2022 goals, 2022 goals? This company's looking far out. I mean, good for them. I don't know if they'll be able to deliver on such a thing, but they're expecting good growth here coming up within 2 years. We'll see. Fourth quarter gross profit was $310 million, $1.2 billion for the full year. Fourth quarter income from continuing operations was $79 million, $14 million loss for the full year. Loss. Just saying it. Sorry, I'm just telling you. Fourth year adjusted EBITDA of $84 million, $227 million for the full year. GAAP net income per diluted share of 13 cents. Cool. Net loss of 4 cents per share for the full year. Yikers. But oh my gosh. Operating cash flow $71 million for the full year. Free cash flow of $4 million. This company doesn't have any cash. Holy crap. Obviously, their transformational plan to exit the goods and focus on the local experiences. They believe it could be $1 trillion. A highly fragmented, growing and migrating quickly from offline to online. Currently, we're the market leader, yet we have less than 1% market share. Excuse me? That's crazy. We are not well positioned in a saturated retail market for the goods category, which is why they're getting out of it. So that makes sense. So there's a couple key priorities for them here. As far as inventory, they're going to build high quality density in core cities and bring on merchants' full catalogs. They're going to modernize, which is going to be delivering a modern mobile experience for customers and new tools to help merchants grow their business. As far as the brand's concerned, they're going to relaunch the Groupon brand and marketing strategy to move from deal-centric to a local experiences marketplace. Reduce local costs, or just reduce costs in general, and right-size our spend to support our go-forward business. We believe successful execution will change the growth profile for Groupon and position us well to win in local experiences. By 2022, we believe we can deliver unit growth in the high single digits, gross billings growth in the high single digits, revenue growth in the mid singles, and adjusted EBITDA margin of in the high teens. Good for them. That's yikes. That's crazy stuff. Fourth quarter summary. Let's look at that stuff. Let's look at some of these fine details. North American gross profit in the fourth quarter decreased 16%. Yikes. Due to fewer customers, lower traffic, and increased competition. You suck, so what do you expect? Higher gross profit per customer. There's a positive thing. But the goods profit decreased 45%, but in local experiences, gross profit decreased 6%. So still a decrease. So gross profit in travel decreased 41%. North American active customers were 26.5 million as of December 31st, 2019, and gross profit per active customer increased 5% for the year end. So international gross profit decreased 13% as well. Ugly. International active customers were 17.1 million. Gross profit decreased 10% for the full year. Whew. What else do we look at here? Well, let's look at this 2020 outlook. They're going to launch a new mobile app and expand bookable offers. They are going to grow North American local units year over year in the second half of 2020. As far as inventory is concerned, they're executing density strategy in 10 cities. They're going to relaunch the brand and deploy a full funnel marketing strategy, and they're going to reset the cost base with the exit of goods and hopefully try to bring in some profit. Now, here's where the stock is down so massively. Here is where it is Do you see this? Reverse stock split proposal? Are you kidding me? Oh my gosh. Groupon also announced that its board of directors has approved and will submit to Groupon's stockholders at the June 2020 annual meeting to propose a proposal to effect a reverse stock split of Groupon stock at a ratio between 1 to 10 and 1 for 12 shares. Holy crap. The devaluing of this stock, you thought it wasn't worth anything now? You just wait until June, baby. This thing's going to be worth a literal penny. By the end of the second quarter is when they plan for it to be effective. That's horrific. That is just a horrific situation, and I want to look now at numbers. Show me these things. Show me these things. So, as far as the current assets, as far as cash and cash equivalents is concerned, they went down year over year by around 100 million for cash and cash equivalents. Obviously, good to look at that. For liabilities, they only have $20 million in accounts payable, but they definitely have plenty of current liabilities. 821 million. Not exciting. But all things considered, they technically have more assets than they do liabilities. So think of it as you will. That's okay. Anyways, get out of Groupon, guys. Come on now. This thing is garbage. I hope no one's buying Groupon, and no one has been. I was so close to buying some put options on this thing, but I didn't want to. I couldn't commit. I should have. This thing's a piece of garbage. I hope you enjoyed, though.